Good morning and welcome to the OFX Currency Couch. The Australian dollar remained well supported through last week, and we opened this week pushing that 80-cent handle again, with resistance still at a key technical level on approaches to 80.30. This week, with little macroeconomic data for our own domestic economy, we look offshore and events, particularly the BOJ central bank meeting and the ECB policy announcement as well, for further direction. The US dollar remained volatile into the end of last week as the US government shutdown forced investors to spread those equity risks throughout the euro and the yen as well. And of course this week as well we see the pound testing post-Brexit highs at 139.70 after French President Emmanuel Macron suggested that a bespoke deal could be negotiated between Britain and the EU. Those increasing optimism for the sterling remains positive, and if we see a push towards 140, then we're starting to look at a stretched position here, and that could force a correction lower for any pound buyers if we do see that Brexit commentary turn negative. In terms of the Australian dollar now, our focus is very much on the events plaguing the US dollar moving forward. We are starting to see a shift in that sentiment and perhaps a short-term bounce as these euro and yen positions look to be stretched through the medium term, and those short US dollar holdings are certainly perhaps overdone at this point in time. If that's the case and we do see a short-term bounce over the next few weeks in the US dollar, that could put some pressure on the commodities and force the Australian dollar back below that 79-cent handle. In saying that, we are still bearish on the US dollar and expect the Australian dollar to remain well supported throughout the first quarter of this year. For more commentary, please don't hesitate in contacting our dealing teams.